Okay, in this video we're going to explain the difference between the marginal tax rate and the average tax rate. So suppose we've got a progressive income tax structure. That is, the first $10,000 that you earn is taxed at a rate of 10%. The next $5,000 is taxed at a rate of 25%. And the next $5,000 is taxed at a rate of 30%. Anything above $20,000 is taxed at a rate of 40%. So it's a progressive income tax structure. And let's go ahead and calculate the average tax rate. So the average tax rate is equal to the total tax that you paid divided by your income. So in this case, your first $10,000 of income is taxed at a rate of 10%, which is equal to $1,000 in tax paid. Your next $5,000 of income is taxed at a rate of 25%. That means your tax paid for that portion of your income is equal to $1,250. Your next $5,000 is taxed at a rate of 30%, or a burden of $1,500 for that portion of your income. Now the remaining $1,000 of your $21,000 income is taxed at a rate of 40%. That's equal to $400. Now if we sum all of that up, we come to a total tax paid equal to $4,150. All right, now that we have that, let's go ahead and calculate the average tax rate. So the average tax rate is equal to your tax paid divided by your income. So our tax paid is equal to $4,150 and our income is equal to $21,000. Dividing those two numbers and multiplying by 100 gives us a 19.8% tax burden. That's the average tax rate. Now let's contrast that to the marginal tax rate. The marginal tax rate is determined by measuring the percent tax paid on each additional dollar that you earned. So if this person earns their $21,001 that means that additional dollar will be taxed at a rate of 40%. So their marginal tax rate in this case is different and higher than their average tax rate. So economists use marginal tax rates to understand how tax rates may impact the behavior of people seeking to earn more dollars in the future. A higher tax burden may be a disincentive for people to engage in more economic activity, while a lower marginal tax rate may create an incentive to engage in more economic activity to increase your income.